Credit Union. Welcome to Good Money Moves, featuring Jenna Taubel from First Alliance Credit Union and Andy Brownell. Here's Andy Brownell on Rochester's News Talk, 1340 KROC AM and 96.9 FM.
Good morning. It's time for Good Money Moves. I'm Andy Brownell on News Talk, 1340 KROC AM and 96.9 FM, along with Jenna Taubel, Director of Brand and Digital Member Experience at First Alliance Credit Union. Good morning, Jenna.
Hey, Andy.
Last week, we talked about filing taxes, specifically how to make it less painful.
Yes.
What's the Good Money Moves topic for today?
Yes, well, we are coming up on St. Patrick's Day, and it is a time where people like to wear green, they decorate with green shamrocks, and even drink green beer. So I thought, what better time to talk about getting more green into your account?
Oh, okay.
And as it turns out, there are a lot of ways to get more green into your banking account. And we're definitely going to cover a handful of those on today's episode.
Well, I think everybody could be in agreement. We'd all love to see more green in our account, especially with inflationary pressures pushing up prices all the time.
Yeah.
So where do we start? How do we get more green, more money in my bank accounts?
Yeah. So the first tip that I have today is to really just save more money, save more of the green that you make, and monthly, right? And it's not just sporadically, it's consistently. So if you're not already putting money into a savings account, now is the time to start doing that. Now, a really good starting point can typically be putting away about 10% of your paycheck each month. But if you can't do that, and you want to start somewhere a little bit lower, like 5% or even 3% to get started, do it. There's no wrong amount of money to save. The only thing is the more you can, the better. But
and
even saving
$1,
yes. And the earlier, even saving $1 a day, right? There's 365 days in a year. You save $1 a day, that's $365 in your bank account at the end of the year. Just think about that. But, for example, let's say you make $30,000 a year. 10% of that saved would be $3,000 a year or $250 a month.
Okay.
At 5%, you'd be looking at $1,500 for the year or $125 a month. At 3%, that's $900 saved in the year or only $75 a month that you have to put away and to start saving. And $900 at the end of a year, that's a really healthy start to an emergency fund.
Right. We've talked so many times about how important it is to have at least that minimal emergency fund in place. And looking at what you just said for numbers, at 3%, you're talking $3 per day.
Yeah, reasonable, very reasonable amount of money to put away. And again, even if you can only do $25 a month, that's still better than no dollars a month. And I think it's important too, if you already are a pretty diligent saver, maybe you're already saving that 10% or even that 5%, see if you can increase that amount by 1% this year. So just very incremental increase. So you almost won't even feel it. I guarantee it, but you'll actually be saving more and kind of slowly make your way towards that 20% of your income being saved from each paycheck.
I won't even notice.
And I know what you're thinking, like, oh, well, that means I have to go in and take money from every time I get paid and move it into my savings account. And it's one more thing you have to remember, and it can actually be a really big obstacle for some people. But a really great way to get into a regular habit of saving is to use automation for this. And there's a couple of different ways that you can go about doing that. So one way that you can look at doing this is by using direct deposit. So most people already get their paycheck directly deposited into their banking account every 2 weeks, every month, whatever your pay cycle is. But a lot of people don't know is that you can actually split your direct deposit into different locations, into different accounts. out the gate. You can have your employer do that when they submit that to your financial institution. So you can split your, yeah.
Can I go to my financial institution? Can I go to First Alliance and say, you're getting it into this account and then I want it automatically routed to other accounts?
Yes.
Okay.
Yes, you can. Yep. Yeah, there's a couple of different ways you can go about that. You can go about it from the direct deposit paperwork that you have with your employer, or you can go to the financial institution, First Alliance, if that's where you are doing your banking, and split it up that way. Or another really great way to do it is if you have online banking, you can schedule those payments, right? If you know kind of you get paid every 2 weeks, you can set up, well, I know I get paid every 2 weeks. So starting with my next paycheck, and then every 2 weeks after that, I'm going to move $50 into my savings account from my checking account. So it's happening automatically. You're not having to think about it. And it's actually a really great way to kind of set up even like electronic budget. If you think about like the envelope method that a lot of people like to use when they get started budgeting, you can kind of almost do that with checking and savings accounts and have it almost split a bunch of different ways. So there's not really, again, there's no right or wrong way to do it. And there's a lot of ways to go about it. It's really whatever works best for you.
Okay, another left field question for you.
Yeah.
If I went to First Alliance and said, how many of these savings accounts can I set up? Is there a limit to that? Or can I have 10 or 12 of them?
Well, okay, there is a limit, and it is.
Okay.
I think I want to say you can have like 12 savings accounts and like 4 checking accounts.
Okay, well, it's quite a bit then.
In a single membership. So there's a lot of, and that's not including things like money market accounts, CDs, incentive savings, like that's all. So there's lots of different ways to structure your savings. So it's really about what works for you and how you want to manage your money to help you meet your financial goals, whatever those might be.
And this is where it's great to go in and talk to one of your people at First Alliance and map this all out.
Exactly. And if you're already a member, it's actually super easy to open up those accounts through online banking. If you just log in and you can say, hey, I want another savings account, or I want another checking account, you can do that within online banking all by yourself. You don't even have to get us involved if you don't want to, although we're more than happy to help you at the same time.
Okay.
So the other thing that I think is important here, because we talked about if you already are a saver, so maybe you already do have a decent amount saved up. If you kind of get past that initial couple $1,000s saved in your emergency fund, it's a really great time to assess which account is going to help you best keep that money growing, right? So we're talking about getting more green. One way to do that is to make the best out of interest rates. And so if you've already got money saved in an account, you might want to look at ways to earn more interest on that money. So if, let's say you have $2,000 saved up, that's enough to open up a money market account. And you can even put some money into something like a certificate of deposit, also called a CD. And that's going to earn you a lot more interest. You won't be able to access that money as easily, but you can earn a lot more interest. And if you're new to savings, this is another really good option. I kind of briefly mentioned this a minute ago, but is that you can put your money into a Wincentive savings account. And that's a special account at First Alliance where you get the chance to win cash just for regularly putting in at least $25 a month into your account. So, and you can win up to $5,000. It's a pretty, it's a very fun account.
So you just, a very minimum $25 per month puts you in kind of a raffle, or more or less, right?
Yes. Yep.
Oh.
Yep. There's monthly winners, quarterly winners, annual winners, and then every now and again there'll be some special prize drawings that happen throughout the year as well.
And way better odds than the Powerball, I imagine.
Exactly. Much better odds. And you don't have to hide your identity if you win, like we talked about when we talked about what to do when you win the lottery.
You can just splurge and take everybody out to dinner.
Exactly.
If you get that $5,000 winner. Okay, well, that's fantastic. We're talking about getting more green into your account, seeing as we're at that time of the year, St. Patty's Day. So We'll be back in a moment with more of Good Money Moves here on News Talk 1340, KROC AM and 96.9 FM.
Good Money Moves continues in moments with Andy Brownell and Jenna Taubel from First Alliance Credit Union. This is News Talk 1340, KROC AM and 96.9 FM.
Are you or a loved one struggling with drug or alcohol use?
And Jenna Taubel from First Alliance Credit Union on Rochester's News Talk 1340 KROC AM and 96.9 FM.
Welcome back to Good Money Moves. St. Patrick's Day is almost upon us, and along with that, we're using the theme of getting more green this week on Good Money Moves. Jenna, we talked about starting savings, increasing our savings, putting our savings into higher interest accounts. What other ways do you have for me to get some more green?
Yeah, so another solution is to bring in more income for yourself. And this one is maybe the hardest of them all, I think, but also not hard at the same time. So these days, it's really not hard to make extra money with your interests and hobbies. You know, some people call that starting a side hustle. But to start with that, you first have to kind of make a list of, what you're interested in doing. So some examples of things that people commonly find make really good kind of part-time work for themselves is, if there's things that you like to sell items online, like via eBay, or you can even sell them through Amazon Marketplace these days. You could do tutoring or pet sitting, and there's lots of companies that you can kind of work through to help you get started with those. You could write blogs for money. You can edit wedding photos. You can do things like yard work, rake leaves, shovel snow, all kinds of things. Like the sky's the limit. It's really just what is it that you want to do and how much time do you have available to do it?
Sure.
And again, how deep do you want to go into this? You're going to want to also figure out what resources you're going to need to start this extra side business of yours, because that's really what it is, a side business. Are you going to need something like a website? Do you need a membership to another website? If you're going to be shipping things, are you going to need packing materials? Kind of what is some of those startup costs, if there are any? And then also kind of take stock of, what resources you already have available to you, obviously. And then once you kind of have your resources ready, schedule some time to start working on that, getting that side hustle kind of up and running, and start organizing yourself a little bit. Preferably not during your regular job, but really the only caveat with this is that you still want to make sure that you have some good work-life balance. It's good to be productive. It's good to earn income, but you also don't want to sacrifice your time with friends and family. I mean, that's what you're here for, friends and family. Life needs to happen outside of work.
Yeah. And life is short.
It is. And I think it's also really important before you jump into this idea that you manage your expectations around this. It's not that your plan will fail or anything like that, but you do need to be realistic. Most side hustles make at most an extra $1,000 a month. And so if you're just starting out with something like this, you're probably not going to start out at that. You're going to have to build up to that amount, and you may never get there depending on how much extra time you have available to commit to this extra kind of side job, side business that you're starting. So
that's 12 grand a year if you actually attain that.
Exactly. Yeah. I mean, it's not small. It's not chump change. That's for sure. But it does require work. It's not something that happens overnight. You still have to work towards it. If you need $1,000 tomorrow, starting a side hustle is not going to get you there. This is more of a long game. Kind of a second stream of income is kind of what you're angling for, really, when you're starting a side hustle. But if that's not feasible for you, given current commitments in life, maybe your job is already demanding and you're like, I do not want to take on more work outside of work, like that's just not where you're at, that's fine. Some other ways that you can go about kind of increasing that income then are to be proactive at your current employer and ask for a raise. Before you do that, though, make sure that you really do understand what the competitive salary looks like for your position. And you also want to kind of keep in mind that the average pay raise is only about 3%. So a good pay raise ranges from like 4.5 to 5, and anything really more than that is considered pretty exceptional. So just kind of set your expectations going in and ask for something realistic. If you come in asking for a 10% pay raise, you're probably not going to get it. Being realistic. But if you do need that much extra income and you can't get that from getting a raise, or you don't have time to bring in that extra money outside of work, then it may be time to just seek out that next job opportunity. It's just kind of this is just saying, take stock of what income do you truly need to meet your financial goals, and how are you going to get there? Are you going to start a side business? Are you going to, will a small raise be enough to get you where you need? If not, how do you improve yourself to move into a different position that will allow that level of income to come into you? So
right.
Lots of options to increase your income.
Like to say, the only time you really get to negotiate your pay is when you're first hired.
Yes, very true.
Otherwise, it's going to be those annual increases that you were just talking about.
Exactly.
Okay. Side hustle, ask for a raise. What else can we do to get some more moolah, some more green?
Yeah, well, paying off debts is a great way to free up more income and put more green into your banking account, for sure, because nothing drains your account like having debt. And this is because you're not just paying off the money that you owe, but you're also paying the interest on that money every month. So, and especially if you have high interest debt, you can quickly find out that you owe much more than your original debt, especially if you're only making minimum payments each month on something like your credit card, or even student loans for that matter. There's a lot of information out there about how to pay off your debts. We've covered a ton of them on this podcast over the last 175 episodes that we've had. So if you want to really dig deep into that, just go back through our archives and I'm sure you'll find tons of information. But there's kind of 3 key ways that you can kind of really dig into debt payoff strategies that can get a little more green into your account for you. And so really, to sum it up, just make sure you're making the minimum payments on all of your debts and that you're not ignoring any of them. And then take all the extra money that you have and throw it at one of your debts at a time to really whittle away at those really quickly. And which debt you focus on first is really up to you. There's kind of, again, 3 schools of thought on how to structure this. So if you pay off your smallest debt first, you don't have to worry about being charged interest for that debt, and you'll be able to use the money you're using to pay off that debt to then pay off the next smallest debt once that's gone. So kind of that snowball method. You slowly are rolling up bigger and bigger payments to pay off those bigger and bigger debts. Now, if you pay off the largest debt first, you'd save money on the interest, and you'll be able to use the larger amount of money you're using to then pay off your smaller debts, more of that avalanche method. So you're paying off the really big ones and then whittling away at those smaller ones with that bigger amount of money over time. Or the third option is to focus on the debts with the highest interest rates first. And you should also kind of save money. You would also save money by not paying so much interest on the amount that you owe over time. So a couple of different ways to kind of attack your debts a little bit.
And the common theme on all of them is take extra money and apply it to debt in one way or the other.
Exactly.
Okay.
Exactly.
We're going to take a quick break, Jenna.
All
Back
right.
with more of Good Money Moves, getting more green in your accounts. On News Talk 1340, KROC AM and 96.9 FM.
Good Money Moves continues in moments with Andy Brownell and Jenna Taubel from First Alliance Credit Union. This is News Talk 1340, KROC AM and 96.9 FM. And Jenna Taubel from First Alliance Credit Union on Rochester's News Talk 1340, KROC AM and 96.9 FM.
It's Good Money Moves. Today we're talking about getting more green and moolah, cash, whatever you want to call it. But with St. Patrick's Day, right here, it's green. So we talked about all these different ways of adding income, putting money into your savings to give yourself more money, strategies for that. And now we're talking about strategies for paying off debt. Anything more to do with debt?
Yeah, I would say, we talked about those kind of three main strategies you can use to pay off your debts. But one that we haven't quite talked about yet that is really common and can be really helpful to people who have a lot of different debts sitting out there, especially if you have a lot of different like credit card debts and kind of revolving credit, is that you might want to consider taking out a debt consolidation loan. And when you get a debt consolidation loan, you take out a loan for the total amount of the debt that you owe that you need to pay off. And then you use the money from that loan to pay off all your other debts. So then what essentially happens is you only have this single loan that you have to pay every month, and it has a fixed term to it. So you know exactly when you're going to pay that off, exactly how much you owe every month. It's not going to fluctuate. It's not going to change. You can't add more to it, either purposely or by accident, because it's not revolving, right? It's not a line of credit, it's fixed. And a lot of times when people take on a debt consolidation loan, what they find is that they end up reducing the number of payments they actually have to make, right? Overall, sure. And the total number they have to make in general, because you're not shelling out 5 different credit cards, it's in one spot, but also the amount of time it takes tends to be less to pay off that debt in total. They tend to also find that they have a much lower interest rate on that loan than they do on average for the other debts that they owe. So you're really saving a lot of money in the long run as well.
Yep.
A lot of benefits to debt consolidation loans.
Especially, I think psychologically, you have that one payment, and when it's done, You're debt free at that point if you do it right.
Exactly.
All right.
Exactly.
Any final tips for us on getting more green?
Yes, we have not mentioned our favorite word yet, and that is budgeting. Or a new way that a lot of people like to refer to it as a spending plan, which, again, I know we touch on this a lot on this show, but the thing is that having a budget or a spending plan in place, it gives you so many advantages. It's really like kind of the Swiss Army knife of personal finance in a lot of ways. So when you have a budget or a formal spending plan written down, you actually know where your money is going each month. And that means that you can control what you spend on what items because you're more aware of it. And what does this mean overall is that you stop spending money on the things you don't need or even want. So you maybe don't want to spend, $100 a month on different subscription services, and you wouldn't have ever realized that you were doing that if you didn't budget. Or maybe you realize after you've put together a spending plan that you make a lot of impulse buys and you're like, why am I doing this? I'm not ever going to get to my goal to go on this vacation by doing this. And you can change your habits appropriately because you have that oversight over what you're doing. Or maybe you realize, gosh, I'm spending a ton of money going out to eat or buying coffee on my way to work in the morning. And that's really not where I want to spend my money. Maybe you can then cut back on how much you're doing those things and put the money you were spending there to areas that you do want to spend your money on.
Or vice versa. You could decide that I really do enjoy those sort of things and I find the money from another area to do it.
Exactly. There's no right or wrong way necessarily to budget your money or develop your spending plan. It's what works for you. And as long as you're meeting and reaching your financial goals the way that you want to, then you are doing exactly what you need to be doing. But you still need to have that oversight that you only get through setting up some kind of spending plan or budgeting process. So, and how much overall you kind of end up saving is going to vary from each person, of course, but it's really almost guaranteed that you will save more money that you can then use for literally anything else that you have set your mind on, some kind of financial goal, paying off debt, going on a vacation, having that down payment for a home or a new car, whatever that may be. Having that oversight over your money helps you get there so much faster.
As always, Jenna, great information. And I know there's a lot more out there. Can you clue us in as to where we can find out more?
Yes, I always encourage our listeners to visit our website at firstalliancecu.com. You can subscribe to our blog where we release new financial tips and advice every week. We have tons of other free resources in our resource center as well, downloadable worksheets for budgeting, for helping you decide if debt consolidation is right for you, just getting your finances organized, all kinds of resources out there. And of course, I mentioned past episodes of this show earlier. You can go back and listen to those in a couple of different places. You can go to firstalliancecu.com/podcast or on krocnews.com. You can also subscribe to Good Money Moves on Apple, Google, and Spotify podcasts. And if you love our show, please take a minute to leave us a review on your favorite podcasting platform. Or if you have a financial topic you'd like us to cover on Good Money Moves, please send me an email at marketing@firstalliancecu.com. And of course, I strongly encourage you to reach out to our team at First Alliance Credit Union so that they can help you start making good money moves today.
That's First Alliance Credit Union, federally insured by NCUA and an equal housing lender. Jenna, thank you so much for all the great information.
Of course.
Of course. Okay, we'll do this again next week with Jenna Taubel from First Alliance Credit Union. I'm Andy Brownell. It's Good Money Moves on News Talk 1340. KROC AM and 96.9 FM.
This is News